Hello, everyone. My name is Stewart. I'm the CEO of Orefinders Resources, and I'm pleased to update everybody on our latest happenings. We just announced our new drill program. We're very excited to be back out in the field drilling. That's how we're going to create tremendous value for shareholders is vis-a-vis the drill bit. But of course, we also have a substantial treasury that we're on a corporate side. We're looking at all sorts of accretive and creative transactions to deploy our $7 million in cash plus many millions in working capital, which puts us in a really good financial position. Then, of course, on top of that, we've got a $60 million commitment from the most coveted major in the region, that is Kirkland Lake Gold. They've committed $60 million to earn up to 75% in our projects. We did that deal for a very simple reason. It's to avoid dilution down the road. And quite frankly, I felt that if we had $60 million spent on our projects and an ore body wasn't discovered, well, odds are it's not there. So our job is to finance the discovery of ore bodies. And I think Orefinders is an extremely unique position to see that through. In addition, it has this optionality of deploying its own treasury, which is not going onto its projects. As I said, the 60 million of Kirkland Lake goes onto our projects. Meanwhile, corporately speaking, we have the opportunity to be creative, and we're looking forward to that and working hard to accomplish that. So let's get started. Here's the forward-looking statements. The highlights are such that back in May, Kirkland Lake Gold acquired 9.9% of Orefinders shares, plus it has the option to spend $60 million on our assets. So that's money into the ground, the vast majority of which will be drilling, to earn up to 75%. Over the past few months, we got together with the Kirkland Lake technical team and very quickly decided where our priorities are. And the first priority is going to be our Knight project. We'll talk about that in a second. And then additionally, we're going to be focusing on our 𝐥𝐤𝐤𝐿, which is directly beside the 𝐿𝐴. I'll talk more about that in a minute. So those are our two drill programs that will be coming out in the near term. We've been working very closely with them on designing the program and also making sure that the budgeting process, which for the first time, we go through this process with them, had some back and forth, but we're ready to go. And we announced the news on Monday morning. So our Knight phase 2 drill program is starting very soon. We completed phase 1 earlier this year. We had some really interesting intersections, half-ounce material over ore grade widths, a number of those holes underneath the Tironite mine. That's majority of where our new drilling on this phase 2 is going to be focused on, extending that mineralization both at depth and laterally as well. We put about 5,000 meters on the Knight during phase 1, or I should say on the Tironite on phase 1, and showed a lot of promise. And so that's where the majority of our drilling in phase 2 is going to follow up on. Additionally, on the Duggan zone on the Knight project, which is a parallel structure to the Tironite, we'll receive some drilling. So that's going to be our area of focus. Orefinders, of course, broadly speaking, has excellent land positions all throughout the Cadillac-Larder Lake Fault Zone. Our 𝐥𝐤𝐤𝐿 project's right on the Cadillac. Our Morado project is just south of the Cadillac. And of course, our Knight project is in Shining Tree, which is adjacent to the Juby, which is owned by 𝐴RIS Gold. Very aggressive future gold producer there. Expect them to be putting a lot of attention. It's also amenable to the solid mineralization in Côté Lake. Of course, we've got a strong in-house technical team led by our VP of Exploration, Keith Ben, and to have groups like Kirkland Lake, Eric Sprott, and Osisko Development as our shareholders, to me, or at least I think to retail investors, should be a vouch of confidence for not just our assets, but our team and our ability to advance these projects. So we believe we are poised to make a discovery in the Abitibi in the not too distant future. So here's our corporate overview. I'll let you review that at your own. Orefinders, of course, is a part of the OR Group. Orefinders is really our first company, which has evolved and grown into the OR Group. We've got multiple companies. Of course, I'll point out Mustango River Resources, which is our sister company that Orefinders owns about 20% of. I'll note that Kirkland Lake did an identical deal, nearly identical deal with Mustango River in parallel with the agreement announced with Orefinders. So it's they're sister companies. They're both focused on Kirkland Lake Gold. They both have enviable treasuries in around $7 million cash, and they're both controlled by our team at the OR Group. And then, of course, I'll point out 𝐾C Copper, which Orefinders spun out back in 2018, and it retained its position, and we have a substantial share position, so we have exposure to this company. We also have exposure to American Eagle Gold. That was our most recent spin out. So I guess what I'm saying here is Orefinders not only has the ability to create wealth vis-a-vis discovery in brownfields, well-established jurisdictions like Kirkland Lake Gold, but we've been quite creative in how we manage our shareholders' capital. And I think we do so responsibly and creatively by creating these new opportunities and dividends. This is our American Eagle was our second dividend we gave out to shareholders. So I won't get into this. I've largely covered this. The Kirkland Lake District, there is literally nowhere else I'd rather be. Nowhere else I'd rather be than in the Kirkland Lake District if I am looking for gold ore bodies. Obviously, it's in the heart of Ontario. You can drive your car to it. But aside from that, it has produced 40 million ounces of gold over the year ever since the Kirkland Lake ore bodies were found. And of course, the Kirkland Lake ore body itself is a single gold ore body. It's had 7 mines draw from that ore body, but it is a single ore body, and it's the 3rd largest gold ore body in the world ever mined. And of course, it is home to the 𝐾𝐴 mine, which is the world's highest grade mine, or certainly Canada's highest gold mine at 20 ounces per ton. And we're in that exact same environment. And of course, lesser known, but certainly known to the mining industry is the 𝐾𝐴 over in Virginiatown. Now, it's a different style of mineralization, but it was the 𝐾𝐴 of its day, very profitable mine, 11 million ounce produced. And our 𝐵𝐵𝐺𝐵𝐺 project is immediately adjacent to that and has the same style of mineralization, the green flow carbonate ore. That's what we're looking for on our 𝐵𝐵𝐺𝐵𝐺 project. And we just completed a geophysical program, which gave us some really interesting anomalies, i.e. drill targets that we're actually doing 3D processing and artificial intelligence to refine our targets, but expect us to announce those targets and that drill program coming up in the not too distant future. So Kirkland Lake District, partnered with Kirkland Lake Gold, great assets, a lot of money, good team. And right now, all I can say is that if I go back to this slide, Orefinders is cheap. If you look at our basic market cap, we've been in the doldrums, no question about that. But when you look going forward basis, that's how you have to evaluate owning equities every single day. You have to evaluate whether you want to own it. And I think it's a really unique opportunity to get us at I don't say all-time lows, but long-time lows. And when we're just about to go back to the drill bit with great partners and lots of capital behind us in this jurisdiction. And this is where we are. You can see, of course, in the gray here, this is the 𝐾𝐴. This is the high-flying mine in the district. Over here in the purple is the 𝐾𝐴. So in between these two goalposts, you have all sorts of interesting deposits, including 𝐥𝐢𝐤𝐈𝐈 and their upper beaver. That is going to be a mine in the future. We've got, I'll point out Mistango's assets as well, considering Orefinders owns 20% of them. It's certainly relevant to discuss. The reason we took our position and took over Mistango ultimately was for it's a mega asset. It has about over 500,000 ounces, about 2 grams per ton, open pittable. It's extremely strategic asset to not only 𝐵𝐵𝐺𝐵𝐺, which is ultimately why we bought it, but I think it's strategic to the 𝐾𝐴, which is being redeveloped as a 6 million ounce, 1 gram deposit. And same with the 𝐥𝐢𝐤𝐈𝐈 and actually 𝐥𝐢𝐤𝐈𝐈 and its predecessor ownership of the upper beaver once owned the position that we acquired in Mistango River Resources for the same reason, because it's a strategic, the Omega is a very strategic asset and will serve either as its own mine or feed for the next mine in this area. Our Morado asset, nearly 500,000 ounces, open pit, defined. We actually put that into production on a very small scale, more like a bulk sample. We produced nearly 1,500 ounces, and we sent the ore to a toll mill. So we know that we can make money out of that. Obviously, there's lots of work. We're not looking to put it back into production anytime soon. We want to take that to 1 million ounces first, and we think it has the potential to go to 2 million. Much like Omega does, and then of course our Knight project, which I'll get to in a minute. So this is our Knight project. You'll note here we are in the gold in the northern section here. Highway runs right through our project. Juby, which was a 4 million ounce deposit, but they've shrunk it and increased the grade. It's in a 2 million ounce range, but much better grades than it was when it was owned most recently by Pan American Silver. 𝐴RIS, of course, is a well-financed, group with a really great team who are actually undergoing their own drill program right there. So they're expanding it, we're expanding it. I think it's sensible when the time is right for this area to be consolidated. I am a believer in consolidation when it makes sense. We just completed a fairly substantial drill program on the Knight project. As I said before, we had some really good results. As you can see here, 14 meters at 4 grams. And so on and so forth. These aren't the results. Actually, these aren't the high flying results we have posted here, but we had some half-ounce material over 5 meters, etc. But I'll point out here, this is the Tironite mine and its underground workings, and this is where we got the high-grade material here directly below the workings, which is exactly where we expected to get it. So future drill programs are going to begin again looking laterally here, where we hit some grade, lower grade material, but near surface, which is interesting to us. So we're starting to think that there could be some open pit potential on the Tironite, which wasn't a consideration prior to this drill program that we completed. And of course, we're looking for very high grade ore shoots at depth. We see double-digit grade materials. The question is finding a blowout area where you can get wider zones, wider veins, etc. So this is really an interesting project. And we've got our Dugan zone, which is really ill-defined relative to the Tironite. It's parallel. They run north-south, and they're just the Dugan zone is just east of Tironite. So there's interesting grades there. But more work to be done, no question about it. But if we can get 2 parallel zones, we really start to build scale, and it starts to get very interesting. This is exactly where Kirkland Lake really wanted to go first. This is their preferred project thus far. Obviously, anything can change on a dime with a drill bit, but this is where they see the best bang for their buck. And I can't say that I disagree with them at this point in time. That said, our McGarry project, obviously very well situated. Again, the 𝐿 produced 11 million ounces back in the day, shut down in 1996. It's been reinterpreted to an open pit deposit, 6 million ounce, 1 gram. And when we have the project immediately adjacent to it, I'll note we own the tailings facility, the Armistice mine, which is the core of where our resources are, which is about 150,000 ounces at about 8 grams per ton in that deposit. But really, we approach this as a discovery project. We're not looking to expand the mineralization in and around the Armistice. We know it's there. It's been drilled substantially. Unless there's something game-changing, we won't put immediate attention there. But there's areas along, this is the area of interest here. This is the Larder Lake Fault here in the black dots. This is where you want to be if you're in Ontario or Quebec, quite frankly. And we did a geophysical survey. Here it is. First time it's ever been done. This is a combination of IP and MT, aimed to see very deep, up to 1 kilometer at depth. We had some very interesting, it's never been done on this project. And of course, when you're looking for deposits next to one of Canada's all-time great mines, which is the 𝐿, which is literally right here. So this is almost a proxy to what Mustango is doing on its Kirkland West project beside the Macassa. Orefinders is doing the exact same thing here on its McGarry project. And this technology is aimed at seeing deep. We did see some very interesting anomalies. This is what it looks like here. We're going to be looking at these zones here where you see the A and the B1 areas. Those are new. Those have not necessarily been drill tested, certainly not with the interpretations that this style or these IP and MT surveys have given us. These are vertical cross sections, but these are fairly sizable anomalies, which is exactly what you're looking for when you're looking to point the drills. That said, anomalies, geophysical anomalies, I don't say they're a dime a dozen, but we see them all the time. And there's only one way to find out what it is, and that is the drill bit, which is particularly interesting here, though. I mean, these line up, both the IP and the MT line up. It's right on the Larder Cadillac fault zone here. I mean, these are pretty interesting targets, never been tested beside an 11 million ounce mine. This is a very good bang for your buck drill hole that we are interested in. We're going to further refine these, put these into 3D modeling, come out with the interpretations, and then look to poke some holes in them, again, with Kirkland Lake behind us. This is our Morado project. This is our original flagship, and maybe one day it'll be our true flagship again. It's really an interesting deposit. It has 2 former producing mines on it at separate eras. One was an open pit. You can see outlined very basically in the red there. And just to the north, it had an underground mine, which was in production about 30 years prior to it back in the 20s. So we haven't paid a lot of attention to it since we did that toll milling facility, but we do have a plan. We've got to drill. We've got some trenching we want to follow up here. You can see it's got some extremely high grade gold on this project. It is just dying for attention. But in a situation where we have 3 assets, we can only pay attention to so many. But we do have a plan here. It's based on these trenchings that we did quite some time ago, but received some very excellent results near surface. And we believe that it has the potential to expand, which is here. This is the open pit area. It's been drilled out, as you can see, quite well. We understand the mineralization there, but it has the potential to go multi-million ounces if we can put some drill holes here, which has just never been done. Again, mineralization at surface, very high grade, looks exactly like the mineralization over on the open pit. If we can start to expand on strike laterally, then this really grows and gets scale. Beyond that, there's all sorts of longer term exploration strategies. I won't get into that right now, but the Morado truly is an interesting project, and there's lots of activity going on with North Star and other groups in and around that area. So it's a sort of an underexplored area where there's a lot of potential, but we like this project. Last, I'll point out, as I noted before, Orefinders has been very creative on the corporate front. We own 18% of Mustango River Resources. We beat the odds and we took over the company from a management team who just wasn't focused on delivering shareholder returns. As I said, we beat the odds and took over this company at an extremely low cost base. Our original investment was $250,000 in shares. And it's turned out to be a huge success, and I think gave a lot of credibility to our team. Next, QC Copper, we own 9% of, I think, one of the most interesting copper and gold projects in Eastern Canada, bar none. It's in the process of coming out with a 43-101 maiden resource, reinterpreting a high-grade underground mine into an open pit. Stay tuned. In and around Labor Day, we'll have those numbers. I think that 9% has the potential to be worth an awful lot of money for Orefinders shareholders. And last, I'll note American Eagle. It's drilling in September. It's got wonderful assets in the Carlin Trend in Nevada, probably the richest gold endowed area in the world. And it's got Mark Bradley, who is its VPX, who discovered Gold Rush, and he's looking for Gold Rush Part 2 just south of it. And that was the second spinoff we did, as I mentioned before. Orefinders retained a significant portion of its shares and dividended off the other 50% to its shareholders. So I think that just speaks to the effort that our team puts into. So ultimately, as I said, this is our team. I think best in class in the junior resource business. So as I wrap up here, Orefinders very simply has a strategy of creating wealth vis-a-vis the drill bit, but also we're in a unique position to deploy upwards of $7 million into opportunities that could look like this or could end up in mergers and acquisitions. So really, the sky's the limit. I encourage anybody to reach out to me. Here are my contacts. I get back to all shareholders. And in the meantime, I appreciate your time, and we'll speak soon.